Good morning, everyone, and welcome to the Daily Hunt for Multibaggers. It's Friday, February 6th, 2026, and we've got a packed show for you today. We've been sifting through a pretty intense volume of user discussions and market commentary from yesterday, February 5th.
That's right, Ethan. It was a really mixed bag out there. We saw a lot of chatter, with several different stocks flagged across various sentiment spectrums. Some really speculative plays are generating a lot of buzz, while others, are facing some serious headwinds and challenging KPIs. Overall, I'd say the market sentiment we're seeing leans a bit cautious, but there are always those pockets of optimism.
Absolutely. Let's dive right in and break down what we found. First up, let's talk about Next Energy Inc., NXXT. Now, the community posts are pretty excited about NXXT's growth, suggesting things like 250. Okay, let's move on to Strategy Inc., MSTR. Now, the discussion here is pretty intense, with a lot of talk about Bitcoin and significant losses. But, this company is essentially a leveraged bet on Bitcoin. If you believe in the long-term potential of crypto, especially Bitcoin, then MSTR offers a unique, albeit volatile, way to gain exposure. There's always that potential for a massive bounce if Bitcoin finds its footing.
Ethan, intense is an understatement. Alarming is more accurate. Users are talking about bankruptcy and delisting. The stock is currently trading at $106.99, which is alarmingly close to its 52-week low of $104.1665, down from a 52-week high of $457.22. That's a brutal decline. Their debt-to-equity ratio is an astronomical 14.147, indicating extreme financial leverage. And the recent news confirms massive Q4 losses primarily due to Bitcoin write-downs, while their beta is a whopping 3.535, signaling extreme volatility that amplifies downside as much as upside. This company has been a stay away for us many, many times, and these financials are still screaming caution.
I get the risk, Brooke, but the community is highly engaged, and sometimes these heavily discussed high-volatility plays can offer outsized returns if the underlying asset, Bitcoin, reverses course. It's a high-risk, high-reward scenario, and some investors are looking for that kind of action.
High risk is one thing, but this is a company with a precarious balance sheet and demonstrated inability to manage that risk effectively. The fundamental KPIs are simply too weak. For Strategy Inc., MSTR, we have to classify it as a stay away.
Next, let's look at United Health Group, UNH. I'm seeing some user posts discussing a substantial decline, with one asking, what is actually going on with UNH? They are down like 50% from peak. But sometimes that kind of dip is an opportunity. There's still a healthcare giant, a fundamental part of the economy, and insiders have actually been net purchasers, which could be a signal of a long-term bottom. They've had buy ratings from us in the past, and a dip like this for a major player can be a chance to get in.
Ethan, that 50% drop from its 52-week high of over $600 to its current price of $268 is due to very real fundamental problems. Users are correctly pointing to government investigations into their Medicare practices and anticipated cuts to Medicare payouts in 2027. Their net profit margin is a very thin 0.0269, and their operating margin is even worse at 0.00336. These thin margins mean any reduction in payouts will severely impact their profitability. News is even asking if a dividend cut is coming. While insider buying is a glimmer, it's a small percentage against a backdrop of huge external pressures and financial vulnerability.
But healthcare is non-negotiable, and they have a massive market share. These government concerns could be overblown, or, they could find ways to adapt and maintain profitability. That insider confidence at these lower levels suggests they believe in their ability to navigate these challenges.
Adaptability for a company of this size under this level of scrutiny isn't a given. The headwinds are significant, and those thin margins leave very little room for error. The market is clearly expressing severe apprehension. For United Health Group, UNH, it's a stay away.
Lastly, we have Snap Inc., Snap. Now, I know the general sentiment on social media is often tough on Snap, with some joking about MySpace and Friendster. But let's be fair, recent Q4 earnings actually surpassed estimates, and their revenues increased year over year. Some analysts are even upgrading them to buy, with price targets significantly higher than the current $5.12. They've had a buy rating from us recently, and with positive top-line growth and some renewed analyst confidence, this could be a turnaround story brewing.
Ethan, let's not get carried away by a single earnings beat that hasn't fundamentally changed the picture. Users are accurately calling them out for hemorrhaging money. Their net profit margin is still a negative 0.086, and earnings per share is minus 0.23. The company is simply not profitable, and their debt-to-equity ratio is an alarming 186.482. This is a company with significant financial risk, relying heavily on debt and consistently losing money. Plus, insiders have been net sellers of shares, shedding 1.17% of their total holdings in the last 6 months. That contradicts any renewed confidence you're seeing from some analysts. The stock is trading near its 52-week low for a reason.
Well, the revenue growth and some analyst support could signal that they're finding new ways to monetize, particularly with subscriptions. These are early days for a potential turnaround, and at $5, the upside could be substantial if they hit that inflection point.
While I acknowledge the revenue growth, the unprofitability, the massive debt, and insider selling are far too concerning. This is not a strong financial foundation for a turnaround. For Snap Inc., it's a firm stay away.
All right, Brooke, that was a lot to unpack. Let's give our listeners the rundown for today's deeper analysis. Investigate as buy, Meta Platforms, Microsoft Corporation. Investigate as cautious buy, none. Investigate as speculative gamble, Next Energy Inc., NXXT. That brings us to the end of today's Daily Honey Funnel of Baggers. Just a friendly reminder, this podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making any investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset. Thanks for tuning in, and we'll catch you next time on The Daily Hunt.